There is a solution for that is sponsored by VARC Solutions. VARC Solutions helps small businesses succeed by delivering expert QuickBooks bookkeeping, consulting, quick-base development, and integrated solutions. If you own a small to medium-sized business that uses QuickBooks or QuickBase, the experts at VARC Solutions can help. In business since 1999, with people who care and the knowledge and experience to solve your toughest problems. Visit varcsolutions.com for all your QuickBooks needs. Welcome back to another edition of There's a Solution for That, where we help small businesses succeed by discussing challenging business problems and best-in-class solutions. All right, welcome back, everybody, to another edition of There's a Solution for That. We have a repeat guest today, Kevin Lacey, who's been on our show before. I guess in a prior episode, he had talked about reasonable compensation, which is a topic that a lot of small businesses need to talk about at some point. But today, we're going to be talking about CFO advisory services and why really every small business needs to be working with a CFO. It just so happens that Kevin is a CPA, an MBA, and a CFO. So he's got a lot of letters after his name. So Kevin, welcome back to the show.
Thanks. Great to be here, Brad.
Awesome. So we're going to be diving deep in this episode into CFO. And for those that are listening that have been following the show, you guys know that, we're VARC Solutions. We're a QuickBooks company. We're a bookkeeping and consulting company. But bookkeeping is different than, a CPA practice, right? It's different than a tax practice, and it's different than a CFO advisory. And so Kevin, just ground floor, kind of educate the audience. What is the difference between all these different terms that we hear, CFO, controller, accountant, bookkeeper, and how do you see that in terms of your role as a CFO?
Yeah, great question. I think it really comes down to scope and perspective. And you want somebody in each role that's kind of in their lane that's really focusing on the key value that they add. So bookkeepers are recording, accountants are recognizing or categorizing, and the controller is monitoring and improving systems. And when you layer the CFO part on that, he's looking at all the pieces of the puzzle and determining strategy, kind of a liaison between finance and the management of the company.
Well, and it is a confusing thing too, because I know sometimes those lines get blurred, right? Like we do bookkeeping, but we also do kind of controller, in some scenarios with some clients when they need some of that monitoring and making sure that things are getting done. And a lot of times, CPA firms are saying, hey, Brad, hey, VARC, this client needs to do these journal entries or doing these adjustments, and we'll go in and do those things for our client. Usually it's at the advice of a CPA. So it is kind of weird, right? It's not just these black and white definitions, but it sounds like CFO definitely more on the strategy side, more on the financial management side. But one of the buzzwords that I hear all the time is the word fractional. But I know that not everybody knows what a fractional XYZ is, right? Because there's fractional chief operations officers, there's fractional CMOs, chief marketing officers, there's fractional CFOs, but and so that's kind of like almost like a part-time person in that particular role. But what in your mind, what is the difference between a fractional CFO and someone like yourself that's doing that CFO advisory?
Yeah, when I look at the fractional CFO, really it's a member at the table, at the management table, that's participating even-handedly. They're in meetings. They have usually a set schedule. It's just not full time. So part of their time is focused on this. And depending on the size of the company, a fractional CFO can be a good fit. What we focus on is the advisory piece, where it's like a coach to the owner. A lot of the businesses are smaller, where you can really stumble into $1 million and then have a lot of problems. So when you are looking at the landscape and you're the only one making the decisions, you're responsible. You don't really have a board yet. You want to scale, but your role as the leader of the company is to make every decision. So you really need that advisor person to come alongside you, help you set up the systems and the structure, the planning structure that will help you make educated decisions or informed decisions about the future of the company, how to monitor the transactions that are coming through, and act in real time in response to what's happening in the moment based on the metrics that you've set up. So it's really a coach that comes alongside and helps the business owner run their business.
Okay, so let me see if I get this straight, because again, I try to be clear in my own head before I can try to explain it to somebody else.
Yeah.
So fractional is more like almost like a part-time employee. I mean, they're maybe not a W-2, but they're dedicated in your office, whether that's in person or virtually, but they're dedicated to you for a certain number of hours every single month. And when you need a lot, that sounds like that's probably helpful. When I think of like attorneys, like some of the bigger companies have legal counsel, right, inside the company. And I imagine there's fractional legal counsel as well, but there's a difference between having someone that you're paying full time or, a lot of time versus someone who you can reach out to when you have questions, when you reach out when you have a need, when you reach out when you have a problem. That's different. And so is that maybe a good way of looking at it, in the CFO world? That question, answer, help, consult strategy versus having somebody that's sitting in an office.
Yeah, I think it is a fairly good analogy. I think in the terms of legal, like if you were to retain a lawyer, this would be the type of arrangement that you're talking about, where we have a question, we go to him, and he knows the law, he knows his area of expertise, and he knows generally how to advise the company. But I think the difference between the CFO advisory is I am directly involved with the client's business.
Okay.
We're determining what metrics are driving the business and how to adjust those metrics or adjust our operations to meet their goals. So it's um, much more intimate, if I could
Yeah.
say that. I mean, it's a much closer relationship with the business itself and my services than
Yeah.
just a traditional advisory type of position.
Well, so here's kind of a follow-up question to that. And this is where maybe I need a little bit more clarity. And that's, how much of it is I've looked at your financials, I've had conversations with you, and here's what I recommend, versus actually like getting into their books and making changes or helping refine their chart of accounts and their financial statements so they're clear. Like how much of it is getting into the file and getting into the accounting versus just more of a arm's length, here's what I think you should do.
Uh, I don't think arm's length is a good term. Kind of the opposite of that. So if you think of the 80/20 rule, the real thrust of it is we get in there and we see the things that are driving your business. So usually in revenue, profitability, and cash, you're going to have five metrics that are responsible for 80% of what's going on in your business. And those are the things that you can adjust to change the results of your business. So we get in there and anyone can make a plan. And one of my favorite quotes by Dwight Eisenhower was, plans are worthless, planning is everything. So really when you get in there and you say this is what I think it looks like, there's always adjustments that are made, there's always new revelations that you find out. But I think the real key of this service is the ongoing support where we're working together over and over, and
Yeah.
you learn together what the sensitivity of those drivers are. And but usually you can glean from a good financial review. It's like, this is really what I think's going on. Let's start looking at these things. So those are pretty standard or pretty consistent predictors of performance.
Okay, got it, got it. Well, so when we talk about small business, and you mentioned, like small businesses, there's a big range, right? I mean, there's a big difference between a small business that's generating $100,000 a year, $300,000 a year, 1 million, 2, 3, 4 million a year. What is kind of that, at least from your experience, what is the sweet spot where someone is really uh, not only needing your services, but also at the same time getting a lot of value out of your services? Like what's that range?
Well, I think if we put aside the goals of the company, like if you want rapid growth, you may not be making a lot of money in the moment, but those types of businesses that really don't have huge revenue but have huge goals to accomplish, I think that's critical to have my type of support.
Okay.
But I find that, like I said, most or very often businesses can fall into $1 million in revenue.
Yeah.
Um, Not saying that that's a small feat, but that's the thing that I see over and over and over. It's like all of a sudden they put out a product, they got 5 employees, and they really don't know what they're doing. So really, when you're like 500,000 to 4 or 5 million, I think that's really the sweet spot of the people that I'm looking at, depending on the goals that they're trying to achieve. And once you get into a 10 million range, you're probably looking at more of a fractional to a full-time CFO. But
Yeah.
what our service does, it really helps put in the infrastructure to get them on that roadmap of planning.
Okay. Yeah, and it makes sense because, like, I mean, if you're 5 to 10 million or 10 million plus, you're probably making enough money to be able to hire someone full time on site and they're part of your team. They're part of your leadership team. They're in every conversation, like you were saying. But so it sounds like to me you kind of fill that gap between I'm starting out, I'm just kind of trying to figure things out, and I want to scale, I want to grow, I want to get bigger, but I also want to get bigger profitably. So that I can get big enough and to where I can hire a full-time leadership team, which would include a full-time financial officer. So um, do you run into companies, especially again on the smaller side, that maybe think they don't need a CFO? Like, how do you address that type of question or maybe objection, if you will?
Yeah. As as we discussed, I think every company needs a CFO, but we've seen the statistics about the number of businesses. I read the other day that up to 90% of startups fail. And sometimes you just make mistakes that you don't know what you don't know. And
Yep.
before you everything really falls out, it's too late. Um, and in today's world of fast moving AI, supply chain constraints, one huge mistake can really cripple a company. But I think we tailor our packages to the size of the company, and we have different models where we can work with you on different levels. So if you're a $5 million company, we're meeting weekly and talking about your numbers. If you're making $1 million, there's no need to meet weekly. We could meet once a month, and in some cases even quarterly. So I think the the interesting part is that the less you think you need it, the more you probably need it. In that
Hmm.
you don't, your overconfidence will will really steer the ship the wrong way sometimes. But if you look at it as akin to like a personal trainer, it's like they don't have a lot of, or most coaches in general. It's not like there's a ton of secret knowledge here that um, all the knowledge comes from your business. We're looking at, I mean, I have training and you mentioned all the letters after my name, but when it comes down to it, it's how does your business actually run? And how do we work together in a way that you're accountable to your business, to your goals, to what you committed to? And it's just keeping that track. And when people get together, there's a group think where problems just seem to get solved that you wouldn't have solved ordinarily on your own. Either party is throwing questions or pro forma scenarios at one another and makes you think and really think through these exercises. And that's really where our value is. So, at any level that someone's running a business, I think you need that person in your life.
Yeah, for sure, for sure. Well, um, I you mentioned like wearing hats, and I think anybody who's listening to this show who's been in a business for a while, or they've had startups and failures, or maybe startups and amazing successes, we've all gone through that phase where we're trying to do everything, right? Before we feel like we can afford to hire, a team to do different things within the business, we try to do everything we can. We try to use our family, we try to use our cheap friends, to
Yeah.
do different things, all just to save a dime. And that's and again, sometimes you got to do that, or you have to do that when you're getting started. Um, but um, when you, but I mean, I'm good at a few things, but I know I'm not great at everything.
Right.
It's like one of the I share with my team all the time. It's like I can't design anything artistic, creative to save my life. Very good at organization, very good at structure, very good at vision, that kind of stuff. But so, you translate that type of experience to someone who is a business owner, they probably have a high degree of technical knowledge or skill in a certain area. And that could be, hey, I'm a roofer. I know everything. Ask me about roofs. I can tell you everything I know, everything you want to know about a roof. I
Yeah.
can even break down how much it costs, how much labor. I mean, I could probably nail that if I was a roofing expert. That doesn't mean I'm a financial expert. Do you kind of get that sense as well when you talk to people who are like, I think I need it, but maybe I can do it on my own?
Yeah, exactly. Well, that's the classic, the book by Michael Gerber, E-Myth, where you're you're one of the best people at what you do. So you go out and run a business that, or you have a business that uh, has technicians, and you're not equipped to run a business of technicians. You're just technically proficient. But I
Yeah.
think we all have blind spots, and I think it's funny. One of the things my dad taught me is I could do anything I set my mind to, and one thing life taught me is there's a lot of things I shouldn't be doing.
Right.
So there's things that you're proficient at. So the things that you add the most value, that you are really have a special talent for, those are the things that you should be adding value in your company by using those things. And
Yeah.
if it's like you look at personal trainers, like I said, anyone can do it. I mean, you can get really far by the discipline of working out every day and watching what you eat, but the majority of the company or country is obese. So it's not magic. It's just
Yeah.
there's certain accountability standards, and there's certain ways that people can help you think through different types of problems. And
Yeah.
the worst part is the more successful you are, or the quicker you're successful, the more you're confident that you can do anything. And then
Yeah.
the mistakes are really magnified by the time you really have to dig in and try to fix it. And I work with primarily very small companies, and I see this all the time where
Hmm.
the owner thinks everything is as perfect as it could be, and his staff doesn't know what they're supposed to be doing, doesn't know their role in the company, doesn't know their
Yeah.
responsibility. And when you don't have stated metrics in the company that the whole, or goals that the whole company is working towards, it's very hard for the employees to see past their technical responsibilities and add
Yeah.
greater value to the company.
Yeah. I've seen that too. Especially again with very, very knowledgeable, very, very experienced, highly intelligent, you know, go-getters. They think they can do everything, and that gets you only so far. But then when you need to grow and scale, I mean, you can only grow and scale until you're dead, right? At some point you can only work X number of hours, so you can't scale beyond the amount of hours you work. Period.
Right.
Um, but that also gets in the way of being able to delegate, right? Is being able to delegate things that you aren't maybe the best at. There's that whole strength finder thing that talks about like doing what you're strong at, not what you're weak at. But if somebody thinks that they're strong at everything, that keeps them from delegating. Have you ever heard of that book by Marshall Goldsmith called "What Got You Here Won't Get You There"? Have you ever heard of that one?
No, I haven't, but I'm a big believer in that
It's
method, that thought process.
it's a great book.
Yeah.
It's a coaching book, for leaders. It's called "What Got You Here Won't Get You There" by Marshall Goldsmith. But one of the things that I love about that book, and he talks about what you just mentioned, which is I'm not going to use the right word that he uses in the book, but basically the fallacy of being the smartest guy in the room, and feeling like you can do it all because you're successful. You've been successful. I mean, you are
Right.
running a company, you are making money, you're successful, and so you just think you can do anything because you've gotten that far. But the whole book, just by the way, as kind of on the side here, is yeah, that's what got you there. you have been incredibly successful doing what
Mhm.
you're doing, but it won't get you where you want to go, right?
Right.
At some point, you've got to bring in other people with you and lean on the expertise of folks like you. So, um, so just using that as a bridge to the next part of the conversation, I think, if I was a business owner and I was evaluating this decision or even thinking about this, especially if I've been successful in a business so far, is how am I going to measure success by working with you? What is kind of like that ROI? What are some of those success stories that you've seen where somebody has started working with you and maybe got blown out of the water in terms of how helpful you were? Just kind of talk us through a little bit about that.
Yeah, I think two clear ones really pop into my head, but I think over and over I see these scenarios where, because I've worked with hundreds of companies, it it's it translates into like hundreds of years of experience, because I've gone in there and I've really seen the entire system. But I had one client who wasn't really watching their receivables, wasn't watching cash turning into cash. They had good sales, things were going well. I went in there and I saw the transactions weren't being reported correctly, and things weren't being reconciled, and the accounts that were reconciled, they were forced. So when we look at just a simple dashboard of what your receivables are doing over time, how they're building, what are they as a percentage of sales, this could have been caught way sooner. Um, but when they brought me in, I was like, I don't even know that there's not a person stealing cash here. And it what I'm blanking on the author, but it's the measure what matters. It's like the things that you measure are going to drive your company.
Yeah.
And the other one, I do a lot of consulting and inventory systems and implementations, and I see all the time that they're not fully costing out their products, that they don't understand the full cost of what it takes to make something, to produce it, to get it out there. And oftentimes I'll just do a simple margin analysis by product and find that their largest selling product has almost no margin. Sometimes I see products that are losing money. And then when you look at the direct
Mm,
labor and direct costs that go into selling that aren't actually cost of goods sold, you really get into a mess. And that's where you get the cash crunch, where when the owner sees those giant checks come in, when he's signing those deals, he's like, things must be going great. And then when the fulfillment catches up, you're really in a horrible situation. And that's something right there that could just sink a company. So
yeah.
I think one of the things that I provide is dashboarding. And when we limit the number of things that we're looking at, because if everything matters, nothing matters. So we try to narrow it down to the things that are really driving the company. And you're watching those every day, you're going to see a trend that you wouldn't ordinarily see, because once you think you figured out something in your business, you stop analyzing it. But when you have that dashboard that shows you, hey, these costs are rising, um, obviously tariffs have been an issue with a lot of my clients. It's like
Yeah.
trying to figure out what the actual price of something is. And maybe that was profitable last year. Maybe you were selling a ton of it. Maybe it's not in style anymore, but you have a huge surplus in your warehouse. Things like that really are evident when we're meeting monthly and we're or weekly, depending on the size of the company, and we can really dig in and figure out where trouble is coming.
Yeah, no, this is good stuff. What's so funny about this is, you talk about AR. Hey, I'm making sales. It must be a good thing. My accounts receivable is growing. That has to be a good thing.
Yeah,
I think it's so funny when you look at financials, and it's sometimes whether it's good or bad is a matter of your perspective, right?
right.
Because I could look at somebody's AR and go, well, gosh, I mean, you have $3 million in accounts receivable. That's great. Well, it depends on where it was before, where it's going,
Yeah.
and is that a collections problem because you just haven't been able to get the cash, or is it because you're just selling so much that it is growing? And it's it could be good and it could be bad, but I think that's where you step in and be able to go, in this particular case, you might think this is good, but this is actually not good at all. And let me explain why.
Yeah. I see it over and over, and just a simple conversation can guide my my advice on what dimension we look at.
Yeah.
Um, Maybe you have 1,000 customers that their average ticket is $50 and you almost can't collect them, and they know they could get away with not paying, and you just turn it around and put in a policy that says we don't extend terms for under $500. I mean, that's an
Right.
oversimplified example, but the thing that I see over and over, that we have a cognitive bias that we think if we understand it, everyone else understands it. I think that's a pitfall in our profession. But when you go into these businesses and you just say, uh, I have a question, and it seems so simple that you're like, I'm embarrassed to ask this, but what about this? And it's something that they've never considered, and it's
Yeah.
something that can really change the trajectory of the business.
Okay. Good stuff. Well, let me ask you this. I want to, just for a moment at least, I'm going to dumb this down a little bit, and just like, when somebody approaches you with, I mean, I don't think anybody calls you up, clarify if I'm wrong, and says, I need CFO advisory. They're probably not saying, I need CFO advisory. They're saying something else that lets you know they need CFO advisory. So, like, when a business owner is talking to you and asking questions, what are the types of things that they sort of ask about, that lets you kind of gives you the impression that what you're doing would be very helpful?
Yeah, I think it's basic human psychology. And I'm sure you've seen this before. The better the company thinks they have a hold on things, the worse things are. But so initially they're going to say, yeah, things are great, everything's going fine. And then when you dig into why did they start their business? What do they want from their business? Are they tracking? What are their pain points, their frustrations? And when you really start to listen to what issues they're raising, it's very easy to translate this into mathematics. Hey, we can look at your operations, we can look at your procedures. And some some clients actually do say, I need your CFO service. And I found that most of those are like they're calling the fire department because one of their rooms is on fire. But if you can get in there and do fire prevention, that's where you really add the value. But I think it's to mention another book, it was Question Behind the Question. It's like when people are saying something, what are they saying with those words? It's not always the
Yeah.
words they use. It's they really get into it
Yeah. Well,
and they
like,
reveal.
yeah, like an example. I mean, who in a family, like, you take it to look at personal finances for a moment, who in a family ever sits around going, I would love to be sitting here working on a budget.
Yeah,
Okay.
exactly.
But what you might say is, I don't have enough money to pay my bills. Like, how come I don't have enough I mean, I'm making a lot of money. How come I don't have enough money to pay my bills? Why am I having to, you know, draw from my line of credit to meet payroll this week? Those are financial budgeting and forecasting types of questions, but they may not be using those words. Um, you and I have talked several times, about, like, if a company's trying to scale, a lot of times that requires investing. Okay, investing in businesses, maybe going through acquisitions, trying to acquire your way into a larger size. So I'm sure you've seen that before. Like, what are some of the problems that people get into when they start thinking about scaling quickly, where somebody like you can really come in and not just save the day, but ultimately help them make that type of growth trajectory, a reality?
Yeah, I've worked with a lot of small publicly traded companies and done a lot of their financial, like writing 10Qs, and done a lot of reverse mergers. And
Hmm.
it's like they say in contract law, it's like the only thing you ever have a problem with are the things that are not in the contract. So it's when you're doing these things, it's the oversimplification of, yeah, I got it. I understand what's going on. And whether that's in a capital raise or an acquisition or in your own business, when you don't have someone challenging the assertions, and not in an aggressive way. It's just like, okay, how did you get to that number? Did you consider this? Did you consider that? When you have somebody to come alongside you and help you talk through these issues and these questions that you think are solved, they really have a magnitude of effect on the outcome if you're infusing capital, doing an acquisition. So these are when they're really, really critical, because it's one thing to grow organically into something, but if you're doubling the size of your company overnight, you you find a myriad of issues that you didn't know were there. And I've seen that over and over. But the better you know how your business works through the metrics, and because everyone runs things on feelings, we only push into a problem because we feel it's a problem. We only look at AR because we feel like it's too big. And those feelings come long after the metrics would indicate that you should have jumped in and did something or changed a process. And that's really the mindset that we drive through. It's like, let's really measure objectively and determine what is the ROI. Maybe AR has a problem, but maybe it's not our key problem. Or maybe at the end of the day, it's not really an issue. It slows down cash a little bit, but you really get to see when you look at your profitability, your cash cycle, and your top line revenue. Those are really the three big things that are going to tell you everything you need to know and what you really need to prioritize.
Awesome. Awesome. Well, I'm going to follow up that question with a different question. And so, yeah, because, you and I both just in this conversation so far have talked about scaling. Hey, I'm growing,
Yeah.
I'm scaling, I'm growing, I'm scaling. I need help. I need help. I need help. But I think the opposite can also be true, right? It's like I've been successful. I've made a lot of money. If you say, hey, last year I made 10 million, I made 20 million, I made 5 million, somewhere in that range. But because of tariffs, because of the economy, because of the market conditions, whatever, now you're in decline and you start seeing sales dry up. And is that also a time to, take advantage of someone like you in terms of CFO advisory? Or is it no, well, let's conserve our cash and just save everything we can possibly save?
Yeah, I think that's the instinct, to just conserve cash. But I think too, the bigger point is you want to have somebody involved in your business that's helping you talk through these things before you get to the declining piece. But those issues do happen. And again, you really are going by feeling. If you're not looking at the metrics, it's like, why are our sales going down? Which of our products are not selling? Which of our services is not wanted anymore? Are our prices too high? Are our margins disproportionate to the industry? Just the story is really in the numbers, and all the things that usually make clients pick up the phone are feelings that come way after the numbers. So I think this is really it's really the same answer to the previous question. It's like,
Yeah,
you don't know what you don't know, and you're just running your business on feeling. It's like, well, this has always worked.
yeah,
Well, now there's a 200% tariff on your product. What do you do now?
yeah,
So, and when you're doing pro forma analysis and you say, well, what if our tariff, or what if our products are tariffed 50% more than they were last year? How does that affect our financials? So
yeah,
we'll do scenario analysis where we can identify the risk and then kind of model what would happen if, which gives you um, lot greater perspective on what could happen, instead of, okay, our revenue is half of what it was last year. When are you seeing that? Are you seeing that when you file your taxes? Or did you see it when your revenue first dropped 25%? So
yeah,
it's that accountability. It's giving a board to a company that was really one person in charge of everything, responsible for knowing everything,
yeah.
and someone really coming alongside him as an advisor.
Well, I was talking with a guy, actually a CPA a while back, and I was mentioning how, in this economy, again, some companies are booming, they're growing like crazy, others pretty static, others are declining. And we just kind of came up on the topic of, what do you do with those companies that are kind of in decline? And he was like, as soon as I start seeing decline, I start cutting heads. I start laying off people. And I'm like, I mean, that's obviously an approach, but I would imagine as a CFO, you've got more tools than just the hammer that says lay off people when things are going slow.
Yeah.
You've got a lot more financial tools in your tool bag. So, what are some of the things that you would advise maybe a client that is in decline, um, beyond just hey, lay off people and cut costs?
Yeah, the expression that comes to mind is when you're a hammer, everything looks like a nail. But I think the business owner knows how his business runs, and I think I hate to be repetitive and keep saying this, but when you see how the metrics are changing that drive your business, you're able to adjust your inputs. So if you have marketing, if you have customer acquisition costs that you're looking at, and you can find a way to reduce that to pull on new customers, or you can find that different segments of your business have different customer acquisition costs, you can funnel your efforts into those types of clients.
Yeah,
And obviously, cutting overhead is a solution, but it's kind of a last ditch effort. And it's really specific by industry where um, can we open new markets? What are our competitors doing? So it's kind of a landscape analysis. Um, what products sell well together? This is a really key one. If you have products that people often buy in tandem, you can start marketing those products together. You can
hmm
change your sales mix, but um, I think unless your staff is or your organization is set up in a way that it's inefficient in the first place, that cutting overhead usually isn't the best route to go.
yeah,
Because as I tell people all the time, you can't scale inefficiency.
right,
So a lot of times you'll see that where overhead is growing and you really need very marginal increase in overhead, but often overhead just keeps doubling. And
yeah,
again, this is another issue that gets into metrics. What is our sales per square foot of warehouse or per retail square footage and or per employee in the company? And it's like, do we really need another employee just because we got 200 new orders a month? Do we need new warehouse people? Like, really, with the pro forma analysis, you can really dig in and talk through these issues and say, what do we really need? What's the minimum that we need to provide for this new revenue? So it really gives you a
got it.
feel for those drivers.
Well, good stuff. Before we go on, just define terms for a second, because I know like pro forma. What is that? What does that mean?
Pro forma is just like a what if, like you take a scenario, a set of circumstances, and define your budget as if that was the reality. So if costs are going up, like tariffs is a good example, or we think we're going to have a slowdown. What if our sales drop by 10%? What does that look like? And we can quickly run those variables through a model because we set up the models to adjust to those variables, and just kind of like um, we can change those very quickly and give you a complete new model of what the landscape would look like under slightly different change scenarios. And
Okay.
the one other thing I'd say is when you're doing pro formas, you want to change as few things as possible because it's very hard to tell what a combined effect is. So we can't say sales are going to go down and tariffs are going to go up and we might be going into recession. Let's do a pro forma.
Right.
So,
But you might say something like, what if we, let's assume for a second that we were having some level of success with marketing campaigns. Um, a pro forma might say, what if we double, triple, quadruple our advertising budget and we kept seeing those same returns on that marketing investment? What would that do to revenue? What would that then possibly lead into in terms of needing additional staff or warehouse capacity? I mean, is that kind of a sense for what we're talking about?
oh yeah, it's up and down, and customer acquisition cost is really, and customer advertising spend is really another huge one. It's like, well, what if we threw $10,000 more at marketing? What would that drive?
Hmm
And then when you set up the pro forma, you can measure that against what actually happens when you do it.
Right. Well, isn't in fact that part that you just said, isn't that almost like not just a part, but almost like the most important part? It's like you can build a plan, you can do a pro forma and say, what if, but if you're not checking in on that plan, if you're not checking in on the actions that we discussed that would hopefully lead to the results, we're it sounds like we're almost just like wasting our time. So how much of what you do is not just building the plan, but also then providing that level of accountability and checking in and checking in and checking in and tweaking and adjusting and that kind of stuff?
Yeah, I think those meetings, once we get the pro forma and the budget set up, or sorry, the budget and the forecast set up, that's where the magic really happens, because that's when we get to see if our plans are working. Um, a little over half, or I should say a little under half of the companies out there don't even do a budget. And
Yeah.
the ones that they do, only a portion of those update that budget. Usually it's just, we're going to do this budget and put it over here and
Yeah.
not look at it until next year. It's like, well, that really doesn't help you much at all when you have different scenarios changing in your business. You could have a favorable budget variance, but you're missing all sorts of things in there that you're not changing along the way. So for most clients, we do a rolling forecast. So we take what the budget was and then we roll it forward the next uh, 7, 12 months, whatever determine to see how things are going to play out. So if you have an unexpected increase that happens since the budget or an unexpected decrease, you can layer that right in, and the budget is very flexible to really isolate new variances that are coming to light. But just doing a budget is a okay exercise, but it nowhere gets you to where you need to be as
Hmm.
far as measuring what is happening in your company. And again, I see very few companies that even have a budget up
Yeah.
to $5 million a year in revenue.
Yep.
And it's like, well, if you don't if you don't know where you're going, you're probably not going to get there.
No, I love that. And speaking personally, it's like, and my wife and I, we've sat around and we've done like a personal budget a few times over the years. But yeah, I mean, we don't look at it. We look at it when the bank balance is at close to zero, and we're going, maybe we should look at spending now when we should have been doing that for the last 12 months, right?
Yeah.
Um, so one of the things that I feel like when we talk to clients, whether it's talking about QuickBooks or bookkeeping or financials, one of the questions, especially when we're bringing on a brand new client for some level of services, one of the questions that I always get, or a sense that they want to see and understand, is like, what is the process? How am I going to be working with you? What is this going to look like after I sign that agreement? And so let's try to do that for the folks that are listening today and watching. If someone was to engage you for CFO advisory, what is your process? Like, what does that look like at a tangible level? Like, what are they going to get? Like, what are you going to do?
Okay. Yeah, that's a great question, because people always want to know, what do I expect next? So really the first part is we want to make sure their books are fairly clean and readable. So once we get to the point of clean books, either we can have a cleanup engagement, um, because very often businesses don't know what they're doing because their books aren't right. The chart of accounts is not clear in what they're indicating or how they're classifying transactions. So it's not showing you the proper trends. So we want to start first with clean books, and then we want to talk about the strategy. Where do you want to go? What are your goals for this business? And um, some people say, well, what if I'm fine with the amount of money I'm making? And that's kind of like a straw man argument, where it's like, I've never met a person that has a business that's completely satisfied with everything that's happening, the way it's happening, never plans to sell it, and just is going to let it run by itself. So we get in there and we talk about the strategy, and then we identify the drivers. And like I talked about, the three categories, the 15 drivers, could be a little more, but really the less is more in this case when you can really capture what's going on. So we start talking about the things that drive the business. So now you have strategy, clean books, and you're starting to identify the metrics that really move this business towards its goals. So it really starts to shape the conversation. Then from there, if they don't have a budget, we'll sit down and we'll take the actuals and we'll either make a new budget or we'll just put a forecast for the next 12 months on top of that budget. And then after we have the good forecast, we have buy-in. The the owner understands the how the business is affected by the metrics, how adjusting those metrics or monitoring those metrics will get him closer to his goals. Then we start into the monthly meetings. And this is really where we get to see things really change. And we get to dig into, are these metrics really what we should be looking at? And the clients will have a dashboard that's set up with these metrics. They'll see these metrics daily. And when we meet, they'll be able to bring questions of, hey, my AR is rising. What does that mean? Or my overall profitability by product is decreasing in this segment. And these are the conversations, or these are the basis for the conversations. And then from there, we can just continue to adjust things, adjust procedures in the company, adjust structure of the company, and adjust the decision points of the company. And it really makes things smoothly transition to where the owner wants to go.
Well, so at a basic level, it sounds like too that this is not a one service fit all scenario as well, right? Because just like some of the things you've talked about, if I'm a product based business, yeah, profitability by product makes a lot of sense. If I've got one service and that's it, there's probably other things that are influencing, profitability and things like that that I need to look at. So it sounds like no matter what engagement you have with a client, it's very, very unique, custom, specialized to that business. It's not just like some cookie cutter formula you follow.
Yeah, absolutely. And I think of it as a like a structure, a framework to
Yeah.
what we do. The framework is the same, but it's different for every single client.
Yeah.
Like I've done probably 100 inventory implementations, and every single one is a little bit different.
Yeah.
So when you get in there and you really are even the same business in the same industry, you have differences in logistics, how they handle things, different locations of geography, different locations of warehouses, all sorts of different things that one thing may not matter to one company, but it's going to be everything to another company. Maybe they shouldn't have an office in New York and when their port is in Los Angeles, or maybe
Right.
they need two port of entry. It really is in these discussions where we're talking about what drives the business. And then when you kind of you have a daily report card where you can see how these things are moving. And it's questions really that ask themselves, where the business owner goes, well, why is that happening? That doesn't make sense to me. And then we support the client throughout the month. Like if they have questions, we can
Yeah.
discuss them. They can email us or whatever. But it really in the monthly meeting, and again, this falls back to system, procedure. We're meeting every single month. And really you can get a feel on the data. You can get a little bit of runway to see, hey, how did that work? Did that metric change over the month? So um, with a lot of businesses, one monthly meeting is enough to talk about strategy and realignment, budget analysis. There's a lot of things we can do in that amount of time.
Okay. Well, and speaking of like, so when you talk about like a monthly meeting, or maybe a client that has a little bit more needs, and maybe you're meeting every other week, or maybe even weekly, that to me doesn't seem like that big of a time commitment from the maybe the business owner's perspective. But what is your sense like when you talk to clients about these types of things? How much time is it reasonable to expect as an owner, right? That this would take to help to work with you to get things launched and off the ground, versus maybe when you get into more of a maintenance mode, and now you're just checking in and just making little tweaks and adjustments? Like how much time should an owner expect to put into this to make it work?
Well, first off, I want to reframe what you said. I don't think it's really a meeting of just checking in.
Mm,
I think it's a true advisory meeting.
okay.
And when we're really just like a board meeting or um, any monthly budget meeting, I've worked for a lot of Fortune 500 companies and 50 people sit around a table and we really dig into the results. And just on a much smaller level, that's what we're doing. It's like, what is your business doing? You take one day per month and you really dig into what's going on. And I will say, even though there's not a huge time commitment from the owner, we do a lot of work in the background. But the owner is going to be looking at this dashboard like it's a video game. It's going to be up on his computer every single day. He's going to be thinking about the metrics. He's going to be thinking about, did this act as I expected? How did this react based on our discussion? So when we're really talking about these monthly meetings, this is when we really get to have the important discussions. And a really strategic, important discussion and change in the company needs to have time to play out. So you don't want to be changing your strategy and your inputs. And if you're a bigger company, say 5 to 10 million, what you want to do is focus on the changes in your company and are trends emerging. So it kind of, again, it's very tailored to the specific business, but I don't want to say that our service is just like a check-in.
Okay.
It's really, it's a hard look at everything that's going on, everything we've decided, everything that we know or think we know about the company, and where is that bringing us?
Right.
And
Got it.
we found that the month is a really good time frame to where if you go, for most businesses, if you go quarterly, and of course smaller ones can do quarterly, but if you're a decent sized company and you're growing and you're looking at things every month, it gives you a pretty good indication of how things in your business are moving, and
Yeah.
it's a very good cadence for the decisions and the discussions that you're having.
Yeah, 'cause I mean, you want to be able to look at, hey, last month we did a deep dive into this stuff. We identified a few things that maybe need to get changed here. It takes a little bit of time to make those changes, but you want to within that month be able to go, hey, are we seeing improvement, right? Are we
Yeah.
seeing the metrics improve in the right direction? And so if you're not having those kind of conversations and you're just assuming everything is working, that's that's not helpful. So I appreciate the clarification. So as we wrap up this episode, anything else maybe that I haven't maybe specifically asked you, but anything else that you want to just make sure that folks that are listening or maybe even contemplating hiring a CFO advisor should be thinking about, questions in their mind that you've dealt with that maybe they should be answering? Just like what are some other thoughts that you have?
Uh, I just, in summary, just say that we're here to work alongside, and the work that I do just bridges the gap between what you think you know and what is actually happening. And almost in every business especially a business with as few as 4 employees, you can really start to see that you don't know everything that's going on in the company. The culture is not such that everyone's making your value decisions. So I had a boss once that said, how come everything we do here seems to be an exception? And it occurred to me that everyone was making value judgments, but they didn't have the same values that we had.
Mm,
So every time someone with different values than you makes a value decision, you're going to come out with a different outcome.
mm,
So this service sets the structure for the culture of the company, the goals of the company. Everyone's working on the same page. And if you have goals in your business, and they may not just be revenue, you may want to sell your business. So you're going to need to know what it's worth. You're going to
yeah.
need to know how it works, the metrics, the inefficiencies, make due diligence go way smoother. Um, but when you're looking at these different aspects of what you want out of your life. Maybe you want to spend less time in your business. Maybe you want to reduce owner hours. There's all sorts of things that we can help you gain control over your business, whether it's growth, and even if you want to manage into reducing the size or the footprint of your business, we can help you do that in a informed way. So I think every company out there needs a CFO.
Yeah.
And whether it's us or somebody else, you need someone to come alongside you, help keep you accountable, and help set up a framework and a structure that you can use to think through the issues in your business.
Well, I love that. And so kind of like what, what thought just kind of struck me as you were talking about that is this is, I mean, even though financial is in the word, right? CFO, Chief Financial Officer, advisory, right? What you're doing has a focus on financials for sure, or just the finances of a business, but it's so much more,
Hmm.
right? You're helping an owner get where they want to go. Yes, finances are part of that, and that's a good place to look because that's where the balance sheets and the financial, the P&Ls and the statement of cash flows, it all kind of shows up there. But it's not just about running financial statements; it's about using those to inform business decisions to help you get where you want to go. So I really appreciate you coming on the show, Kevin, again, and sharing your wisdom, sharing your experience with our audience. Really appreciate you.
Thanks for having me, Brad.
Awesome. And for everybody else that's watching and listening, again, hope this was helpful. If you're in that sweet spot, that you're in that small business financial revenue size of a business, so to speak, you're in that 1 to 4 million plus or minus, and you're like, this could be really, really helpful. Let us know, reach out, visit us at varksolutions.com. We can get you in touch with Kevin, and he can get in there and start helping you. So hope this is helpful. Don't be a stranger. Keep watching, listening, learning, and sharing. And we will talk to you again next week. There is a Solution for That is produced by VARK Solutions. This episode was produced by Ashley White and Aaron Riley. You can subscribe to this podcast on Apple Podcasts or Spotify. Watch the video version on youtube.com/There's a Solution for That. Or visit varcsolutions.com/podcast, where you'll find our entire podcast archive, as well as show notes, links to solution providers, and complete transcripts of every episode. If you love the podcast, please leave a review with your comments.